All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and today we're going to talk about something interesting. You're seeing it like all over the news. Like every YouTuber is like making a video about it. It's like headlines everywhere. It's like inflation. Ooh, it's like this oogie boogie, man. It's like coming for you. You scared, Dylan? Have you like properly prepared?
Oh, I don't keep cash. You know this.
Yeah,
Everything I have is in a stock.
I mean that's not what I meant. I meant actually like putting like a helmet on and like digging a trench outside your house. Like,
Yeah, maybe.
yeah, it's not a bad idea. But yeah, it's people getting all crazy about it, but it's something to look at. But nothing. I don't know. Anytime people make these big, bold claims, like I'm dismissive of that stuff because that's not how real life works. You kind of like find your way towards the middle most of the time.
Yeah, it's just like that bold claim. I forgot the guy, but the market was supposed to tank like 20 or some percentage by April, and it didn't.
It was Harvey Dent or Harry Dent. One
I
of
think it
them
was Harry Dent.
Harry, yeah. Harvey is the Batman guy.
Yes,
Exactly. Yeah, at 40% by April. It's like, well, we're in May, buddy. We're okay. I don't know. Anyways, so I just want to thank you guys for all this kind support too. Dylan and I just kind of doing this for fun. We're two dudes who normally just trade stocks and talk about it anyways, and we started recording a conversation. So we're pretty happy to see the channel growing, but it's fun. By all means, join us in. If you enjoy this kind of content, please give us a like and subscribe below.
Oh, I just to be clear, I intend to quit my job if this hits 1 million subscribers. I'm out.
Sure. Yeah.
The job that I spent 7 years in school to do. So.
Yeah, that makes perfect sense. So this is what I'm talking about, right? Like, I don't know if you're aware that. So you ever use this website Google Trends before, Dylan?
Yeah, a couple times for some of the popping on stock twits picks.
Yeah, it's kind of a cool tool. It's kind of hidden in there where you can look at like what the kind of search frequency is for different terms, and it gives you all sorts of information about like geographical data and like other things that are trending along with it. But this is inflation, and it is at an all-time high. Inflation has never been searched more on Google than it is right now.
Huh?
Crazy, huh? Yeah. But just to put this in perspective, this is inflation compared to Pornhub. So not even in the same ballpark. There's people are interesting creatures. Like, you see this graph and you're like, oh man, it's like, this is bad. It's like, yeah, but like people do other things
really.
Far more often than care about inflation.
You know what's great about that is there's going to be a percentage of people that left after the first graph and saw that the porn on the tab and is just going to think that you were watching porn because it says porn in the top tab on the bar.
Yeah, maybe actually that's funny. It's one of my favorite things to do in videos is to like look at the tabs that are open and see like if someone's got something funny.
Yeah,
like 18 dating websites.
Yeah, it's gonna be great.
Dylan, like to you, what is the basic definition of inflation? This is the Investopedia definition, but
basically just the value of the dollar decreasing due to increase of supply, sort of.
Yeah, exactly. I mean, your dollar today doesn't get as much as as it did 10 years ago, right? You remember back in the day when the dollar menu at McDonald's was like really a bunch of things for $1.
I actually do because I went there all the time when I was like 5.
Yeah, now they call it like, I don't know, the value menu or something. I don't know.
The value menu.
They kind of changed the name because the dollar's not worth enough anymore. So, one of the things they use to kind of track inflation is this thing called the Consumer Price Index, and this is what's made up of it as of December of 2020. So you can see it's really heavily weighted towards housing and then food, which is reasonable, right? Because a good portion of your household budget probably goes towards housing and then also food, right? Yeah, but as you've kind of seen with these low mortgage rates, housing prices have taken off, and like that's certainly part of the driver behind this whole thing, at least in my opinion. The other thing you're kind of seeing here as well is everyone's seen this probably graph at some point. This is the money supply. This is where they get that fact about how 25% of all dollars in existence were created in the last like 12 months, right? With all these multi-billion-dollar stimulus plans. The other thing that is kind of a factor in this that people don't talk about quite as often is what they call money velocity. Look at money velocity; it's plummeted here. This is basically saying that the dollars weren't changing hands; they were coming in. People were shoving in their bank accounts, throwing them right into Dogecoin, and just forgetting about them. Right?
I've actually never seen the velocity graph.
You've never seen the velocity graph before? Yeah.
No.
measures how often like the dollars are changing hands, right? Like, in theory, you kind of can build this whole pyramid where, we'll go back to McDonald's here, and you buy yourself a double cheeseburger, and McDonald's pays their employees with that, and then the employee goes out and buys, I don't know, like
Right.
Xbox controller. It's the money velocity, how many times it changes hands.
Yeah, and consumer goods also peaked in it was like 1998 for how fast, so that makes sense because that was how fast it was. Yeah. Nice.
Yeah. So, I mean, you're seeing a lot of this money get sucked away. So you have a lot of money in existence and you have it moving very, very slowly. So as that money emerges, you're going to start to see increasing pressure. And we've started to see that over the last month or couple months, basically. If you look at a long-term trend of the consumer price index, this kind of slope is still pretty much in line. It's not anything dramatic. I don't know. Have you seen this one before there, Dylan?
I'm not.
No. It's been growing, but it's growing consistently. Nothing egregious yet. It's still early though. Okay. This graph right here ends February 2021. So since then, personally in my own life, I've definitely seen a little bit more kind of people venturing out, spending more, buying more, that sort of stuff since this time. Right?
Everything's starting to open up, at least in Arizona.
Yeah, I'm up in the Northeast. Same thing. People are emerging from their cocoons and going a little buck wild. But what we are seeing though, and if you watch the Berkshire Hathaway annual shareholder meeting this past weekend, you saw Warren Buffett talk about that, how they're seeing a lot of pressure from the bottom kind of up. The commodity prices are rising. He particularly mentioned steel because Berkshire Hathaway owns Clayton Homes, which is one of the largest home builders in the United States. So they're definitely very involved in like the housing trade, and that's a very commodity heavy business. People talk about lumber prices going through the roof, and
it's honestly a ton of basic materials. It's steel, so like X, NUE, applied materials for silicone. There's a couple lumber ones too. Actually, one of those almost made the swing list.
Interesting. So this is the producer price index. This is kind of looking at what companies are experiencing in terms of their input costs for production. And in this one, you can actually see quite a steep kind of change in angle here, right? You're seeing that this accelerate upwards quite a bit. So we are looking at some kind of more bottom-up inflation as well. There's kind of a lack of supply of input items for producers to go out there and make products. We've seen the headlines about this, about the silicone shortages and all that sort of thing, that it's just hard for companies to get what they need to continue making their products. But the real question is like, as investors and individual self-directed investors, is like, all right, like where are the opportunities? That's always something I try to ask myself. It's like, okay, that's interesting. Where is the opportunity? So this is a little chart here looking at which industries tend to perform better or worse compared to like high inflation times. So it kind of helps you kind of hedge where you should put your money. This isn't the end all be all, but it is definitely something to kind of consider. We're going to look at another one here in a second. Real estate is pretty neutral. Real estate's going to move up with inflation, as you kind of saw on that previous slide when you looked at the weighting of the consumer price index. Real estate and kind of housing costs are a large portion thereof, right? So it makes sense that they would move mostly together. So this graph right here, this is a little bit of a pain index for Dylan of late. If you look at this is looking at the PE ratio of companies compared to what their return is in the high inflationary environments, and Dylan's portfolio is heavily weighted in the Palantirs and the Fubus of the world, or Fubo, or however you want to pronounce that word.
I bought so there's been a huge rotation out of the growth stocks.
Yeah.
So my money is going to be sitting pretty for probably a full year. I just can't touch it.
That's all good. If you're in on your convictions, then sometimes you just got to ride it along. You're going to see something in our options trading video about me just riding something along. But yeah, this is part of the underlying reason why you've seen the sector rotation, is that in high inflationary environments, these high PE companies don't tend to do well, right? Because when you're buying a high PE company, you're paying today a certain price and you're expecting many, many more dollars, like 10 years or more down the road, right? But that math really changes, and what those many, many dollars down the road will be worth if you're getting a lot of inflation in between. You know?
Mm-hmm.
Yeah, so it changes your perspective about things. Now, here's another graph looking at sectors and which sectors tend to perform the best in high inflationary environments. If you look up here, you're going to see energy. Energy is like the king. You know, you've probably noticed that a little bit of late. The oil and gas stocks have been rallying right for the last
they've been killing
5-6 months. I'm sad I missed that trade a little bit. Old Uncle Warren Buffett definitely got in a little bit at the right time with some Chevron there. But there are other companies up here that tend to do well in this high inflation environment. These equity REITs, consumer staples companies tend to do pretty well. There's some that will help preserve your buying power. They won't really make you money per se, but they will help you not lose as much on a relative kind of cost value basis. That's the companies that are more clustered here towards the middle, like your healthcare, utilities. Even stocks in general do okay. Not fantastic, but okay. But this is really the kind of area that you're avoiding. These mortgage REITs, IT, and then the consumer discretionary spending.
You'd have to think if the mortgage REITs are going to hold true with the simultaneous housing boom.
Well, the problem is
the high inflation.
It depends on what the underlying mortgages within the mortgage REITs are. If you were to take the time and look through the due diligence and figure out what portion of their loans are fixed versus adjustable rate, and what the kind of quality of their loan portfolio is, there are definitely going to be some value out there in that sector, I think, because people might just sell the entire sector.
Probably, yeah.
But yeah, in general, you're talking about mortgage REITs. You're talking about companies that own the mortgages, and they're getting these fixed kind of interest payments, and a 3% mortgage is not really going to make you rich when the inflation is going over 3% a year. So
yeah, that's true.
Yeah, you're losing money on a relative kind of value basis. But yeah. So here's some ticker symbols that we wanted to kind of consider. It help you play some of these sectors that are a little bit better protected from inflationary environments. Both Dylan and I are both in Simon Property Group, largest mall REIT out there. I think still a relatively decent value. We might actually do an individual video on Simon Property Group at some point in the not too distant future. Super popular one, monthly dividend payer. They own a lot of retail, kind of rental places like Walgreens and things like that, little shopping malls. Geo and Civic are interesting. They are equity REITs, and they're very specialized equity REITs. They're both holdings of Michael Burry in his portfolio. These are both the prison REITs. Something interesting.
Oh,
yeah.
He likes prisons. I forget.
Yeah. On a kind of cost analysis basis, they're pretty cheap, but there's definitely a lot of uncertainty there. Burry kind of likes to talk about like rising crime rates, and it's certainly something we could see. We have seen historically with other times of high inflation, but we'll see. I don't know how much capital I want to commit there personally, but yeah, it's still something to consider. You remember CCI, Dylan?
I think that was in didn't we do that was in the Biden proposal that after the Biden proposal that was going to shoot up?
Yeah, exactly. So the kind of a two for play there, where you're both getting an equity REIT, but also something that could benefit from the Biden kind of stimulus package if that does happen, which is kind of cool to see something like that work out. That's definitely one to look at a little bit more. And Iron Mountain is like a data storage REIT as well.
Yeah, I don't know about the other ones, but I know SPG and IRM also have a solid dividend.
Yeah. Overall, most of these equity REIT companies are solid dividend payers because they're required by law to pay out, I think, 85% of basically their profit margin in order to maintain that REIT status. So some energy stocks I thought that were interesting. Obviously, Chevron is a big boy. Makes good sense. Warren Buffett is a business partner, so it's always nice when you have old Uncle Warren on your side. Suncor, kind of same thing. The other thing that's interesting with Suncor is that they derive most of their revenue from Canada, so it's got a little bit of a hedge against the U.S. dollar as well. Kind of an interesting thought there. BP seems like a pretty solid value from a a cash flow standpoint, assuming that oil prices stay, $60 a barrel and up.
Right.
I'm actually do a little bit more math modeling on this one to see if I want to throw some money at it. ExxonMobil, same thing. Pretty solid company as far as their dividend yield. Cash flow is great as long as oil stays where it is. That's always the big question. Or you can kind of go, this is another Burry play. DNOW is both an industrial company, which tend to do okay in inflationary environments, but they're also, they supply the oil and gas industry. So another interesting take on playing the kind of rising energy prices there. And then Fang, man, I almost bought this company back in December. They're up like 80% since then. So they're a U.S.-based producer of natural gas and oil, predominantly in the I think it's West Texas kind of region.
Yeah,
and they got a cool ticker symbol, right?
it is. I swing REI. I got like a 55% out of that one.
Nice.
That's the same thing in Texas as natural gas.
Yeah, that's awesome. So this is an interesting one too. Consumer staples tend to do relatively well. Molson Coors Beverage Company. See our other videos on Molson Coors Beverage Company. We've done a couple now. This is now around 20% of my portfolio, actually. I'm getting into this trade for sure. I did both a bear case and a bull case analysis. It's one of the stocks Michael Burry was accumulating in the fourth quarter of 2020. We should be seeing an update from him portfolio-wise in the next couple of weeks, so stay tuned for that. We're really excited for that. But other companies that, profitable companies that, people have a hard time not purchasing their products. Altria, large cigarette maker there. Whatever you think about smoking, but it makes money. That's always the question there. Coca-Cola, kind of actually funny. They have that partnership with Molson Coors for Topo Chico, which is kind of interesting. Pepsi, I actually like Pepsi, not so much for their beverage side of their business, which is part of it, but like the Frito-Lay, like the snack side.
Yeah, they're killing on that end.
Yeah, and then I don't know if you knew this, but this is one of the stimulus trades is that Twinkie, nice ticker symbol there, Hostess, has actually had a nice bump up in sales over the last year as well.
I would not have checked that.
Yeah.
Didn't they get bought out by like a Chinese company? Like
they've had some tumultuous kind of back and forth, but Dylan, sometimes you're down in the dumps. Nothing makes you feel better than a nice ho-ho.
I don't think they're that good. I gotta be honest. They're just not that good.
I would have to agree, but people like them, they make you feel a little comfortable, I guess. The next one, Kraft Heinz. This is another interesting one. So Buffett is selling Kraft Heinz. Burry was buying Kraft Heinz. But either way, ketchup is fantastic.
Also don't like ketchup.
Wow.
I know.
All right. Well, this is the end of Two Stupid Guys Trade Stocks. We're going to have to cancel the channel. I can't believe it. He's a ranch guy over blue cheese, too. I don't know what's wrong with this guy.
That's hey, man, West Coast versus East Coast. That's all it is.
I brought this tweet back, too. I don't know if you remember this one about, it was before Burry deleted his Twitter, talking about, a potential hedge you could use if you're really worried about inflation, where you basically take out a 3% mortgage on your home and put it all into good stocks,
It seems at first sight like the riskiest thing you could possibly do, right? And then if you think about it, with the inflation being over 3% or higher, you could put it in stocks, you could put it in energy, just watch it make money. It's kind of creative.
Yeah, I mean, Dave Ramsey would absolutely hate this idea, but
he would not like it.
Yeah,
he would not be a fan.
It's all about that delta, right? If you're paying 3%, but you're earning 7 to 12%, as you said here, you're talking about a 7% delta.
It's very interesting.
It is. I mean, I don't know. I know you were in the housing market. You're gonna take out a little extra cash and just throw it all in FUBU.
I'm definitely not going to do that. I could to lower my cost average. I want out of that stock, so I really think it's going to be huge, though.
Yeah, no, it's got long-term potential for sure. You just got to wait that long term. But yeah, it's a very interesting kind of environment right now. My real point of this thing is it's something to look at, but these people running around with their doom and glooms and like, like, oh, this YMR, and next thing you know, everything's gonna be destroyed. I think that's highly unlikely.
I don't think it's likely at all.
Yeah, exactly. You can profit from this trade a little bit, but I wouldn't go like completely changing the way I live my life based on the possibility of something happening.
Don't you have like a whole doomsday prep in your basement?
Maybe.
Yeah, you showed me. Yeah. All right.
Next episode. All right. Well, thanks for tuning in, guys. We can catch you on the next one.
Later.